you can see the bond market breaking down. We're almost at a new 20-year high in long-term interest rates. I mean, we're very close. But the big problem isn't going to be the 20-year high, but when we make a 30-year high, because I think we're on the verge of a collapse. And, if we get back to a 30-year high in 30-year treasuries, we're above 8%. Because the 20-year high just puts us at about 5.1%. But that shows you the big gap there. The interest rates are not going to stay low. And this is going to be a big problem, not just for the markets, but for the overall U.S. economy, for the federal government, because we have so much debt that needs to be financed. We can't really afford the current interest rates, let alone the much higher interest rates that we're going to get.
Yeah, for sure. I could definitely see that. So with the inflation issue, I mean, obviously gas prices are higher, fertilizers are increasing as such. Do you think this Strait of Hormuz situation, like the impacts from that is going to, I mean, that's one reason why we're seeing higher prices, right? Do you think that this is going to continue in this direction, or some people think that things are going to go back to normal at some point?
I don't even know what normal is anymore. I think we may have changed normal. But, I don't think this war is going to end anytime soon. Because I don't see that we're ever going to achieve any of the objectives that we set out to achieve, at least the way Trump laid them out. I think it's kind of a stalemate at this point where Trump is going to pretend that we have a victory. But the only way he can keep pretending is to basically not officially surrender, but just to leave things the way they are and keep making a bunch of noise. But the Iranians have already shown that they're not going to respond to those threats. And they're dug in. And I think they've already survived the worst of it. So I think, they've won in that sense that they're still there. But I think they have a lot more power now economically than they did before. They have more control in the region and more influence now. And I think we have less. And so I think that you're going to have this supply bottleneck because the amount of oil going through that strait is going to be dramatically diminished. And that's going to keep prices much higher for everybody, not just the people who are, buying oil directly from sources that travel through that body of water. But oil is a global commodity. And so if the price is going to go up everywhere. So even though we're not getting our oil through the strait, the people who were getting it are going to bid up the price of the oil that we're using. Mm-hmm. So, and again, as you...
The warning signs are no longer hidden in the shadows. Bond yields are surging, inflation is tightening its grip, and the entire financial system is beginning to strain under mountains of debt that were never supposed to survive higher interest rates. What happens when the world's largest economy can no longer afford the cost of its own borrowing? As oil shocks, war tensions, and relentless money printing collide at the same moment, the cracks inside the American economy are becoming impossible to ignore. And now, one voice is sounding the alarm louder than ever. In this video, Peter Schiff breaks down why he believes the real crisis may only be beginning.
Said it's not just oil, it's fertilizer, a lot of other things. But the upward pressure on prices is not just going to come from that. We have a lot of inflation in the pipeline. The Fed keeps printing money. Rates have been artificially low. We have been artificially stimulating demand through inflation. And the impact is going to be rising prices for everything. Yes, energy prices, food prices may be particularly impacted, but I think Americans are going to be paying more for most things.
Yeah, I do want to get your, is this a nothing burger or what? So the Fed has been increasing its balance sheet. You look at, we're pretty much back to the levels of June of last year. I mean, in the grand scheme of things, like if folks look at like the 5-year chart or the 10-year chart or whatnot, it still seems relatively low. But if you go within the last year, you obviously see a pivot and their balance sheet continue to grow. Any thoughts on this?
Yeah, I think this is a return to quantitative easing. They've stopped shrinking the balance sheet, and it's expanded by more than $200 billion so far this year. That's not nothing. And money supply is growing now at least 5%, which would be very inconsistent if your goal for inflation is 2%. But I think that's just the tip of this QE iceberg. I think that as the year goes on, I think the Fed is going to step up its bond buying, especially if interest rates really start to spike here. If we break down in the bond market and we get a decisive move above 4.5% in the 10-year, and we're knocking on the door right now. We're already above 5% in the 30-year. But if we start to see rates moving up, I think the Fed is going to step up and try to cap that. And the only way it could do that is to actively start buying the long end of the curve. And so I think the Fed's balance sheet is going to start to really expand faster as the Fed is moving into the market to prevent much higher interest rates. Now, they're not going to really prevent it. They may slow it down. But I think there's going to be a lot of political pressure on the Fed to do that. Of course, you're going to have Walsh in there as chair to do the president's bidding. And I'm sure that's part of the marching orders is, do whatever you can to keep these interest rates down.
Yeah. So with that balance sheet expansion, to my understanding, this, benefits assets. Asset prices typically increase. But we know that Wall Street and Main Street are two different, two different situations, right? And so just curious in your thoughts on how does that impact Main Street? Is this just going to be more inflation and such, and then those that have assets or those assets are going to just increase? Curious in your thoughts on that.
Inflation obviously benefits asset prices because it pushes those prices higher, just like it pushes up the price of goods, it pushes up asset prices. In real terms, it doesn't make those assets any more valuable. It just makes them more expensive. But if you own those assets, particularly if you have leverage, it can make you wealthier when asset prices go up. But obviously, the trade-off, too, is that it's not just asset prices. It's not just the stock market. It's the supermarket. So a lot of people don't own assets, but they go to the supermarket every week. And everything they buy is going to be more expensive. And it doesn't benefit them if their food costs more money. They're just poor because they have to.
Behind the headlines and political promises, a far more dangerous reality is unfolding. The Federal Reserve is cornered, trapped between rising inflation and collapsing markets, while ordinary Americans are being crushed by higher food, energy, and living costs. Every attempt to hold the system together may only accelerate the very collapse policymakers are trying to avoid. And as asset bubbles, geopolitical conflict, and runaway deficits spiral together, the question is no longer whether the pressure is building. It's how much longer the system can withstand it before something finally breaks.
Spend more money on food. So inflation always harms the poor and the middle class the most. And this is going to be no exception. The only thing is that U.S. stocks are already so expensive and overpriced that even if there's a bunch of inflation, prices still might come down. They just will come down less than they would have come down if the Fed had not provided all that inflation.
Mm-hmm. Okay, so this is a major issue. I mean, especially for like the MAGA crowd, those that wanted America to be put first and such. I mean, you have the affordability issue and such, and many believe that Donald Trump was going to address that issue and keep America first and such. But, this seems to be the opposite direction of what many anticipated under Trump's administration. And I'm curious in just like, your thoughts, because I love your political commentary, too, because you've been in that realm and you can speak to that. What does this mean for like midterm elections and things of that nature?
Well, I think Trump's in a lot of trouble with the midterms because I think a lot of the voters are going to feel betrayed by Trump, particularly, the independent voters and Democrats who might have crossed party lines to vote for Trump. I think they're going to be very disappointed. I think he's still going to keep a lot of his MAGA base, although he's going to lose some of that base. But the problem is just losing some of it and losing a lot of independence is enough. And, clearly the war in Iran is not really putting America first, especially when Trump promised not to start any wars. He was very critical of prior presidents who, started wars in the Middle East, Iraq, Afghanistan, saying they were some of the worst decisions that were made and that had he been president, it never would have happened. Well, he's president, and now it's happening with Iran. And a lot of the policies that Trump claims put America first really don't. I mean, the tariffs didn't put America first. I mean, he claimed that foreigners were going to pay our tariffs. But no, it's American citizens that pay the tariffs. And he acknowledged that really again today. He's talking about lowering tariffs on beef to help lower beef prices, which is an admission that tariffs increase beef prices. They're not paid for by foreign ranchers. They're paid for by American consumers who eat imported beef. And that's the same for all products that are subject to tariffs. It's the Americans that pay the tariffs. And, he hasn't addressed the underlying economic problems of runaway government spending. In fact, the government is spending more under his administration than the prior administration. The deficits are larger now than they were under Biden. So rather than solving the problems that got worse when Biden was president, he's just making them worse now. And the economy is going to be the biggest problem, because I think when voters go to the polls in November, they will be in worse shape economically than they were 2 years earlier when they voted for Trump. And since Trump promised that voting for him would make everything better and that prices would fall immediately once he was elected, that we would not only stop the inflation, but reverse it. He didn't campaign to stop prices from going up. He campaigned to bring prices down. Mm-hmm. And so when inflation is as big a problem or bigger than it was under Biden, and the economy is weaker, it's going to be a hard time for Republicans to maintain the House and the Senate. I mean, losing the House is a foregone conclusion because it's such a tight margin, and it would be really unprecedented for the Republicans not to lose the House based on how midterms generally, play out. But I think that the Democrats are going to get the Senate, and that is something that really is not expected or wasn't expected. But I think that's going to happen too. And it's also going to complicate the Republican chances in 2028, because I think as bad as things are in November of 2026, they'll be a lot worse in November of 2028.